Do you ever wonder whether there's a better way to invest into the Europe stock markets? Well, in this video, I'm going to take you through the Vanguard Developed Europe ex-UK ETF. And this comes in at a much lower cost than buying into Europe through something like VWRL. Welcome back to the channel. And if you're new here, hi, I'm Mark of Desperately Seeking Fi. We're going to cover very quickly what the Developed Europe ex-UK ETF actually is, what it's aiming to do, some of its price history, and then take a look through some things like, does it pay a dividend, how much does it cost, what is actually in that ETF. So let's jump across to the vanguardinvestor.co.uk website. On the Vanguard website, what we offer, we know it's an ETF. Once that loads up, we know it's in Europe. There are 10 European ETFs that they have on the website, and then we're looking for the Developed Europe ex-UK ETF. When we jump through the list, we get some of the overview data, the ticker symbol VERX for this ETF. This just gives you some of the basics, how much it'll cost to buy one share in this ETF, how many stocks there are within it, its ongoing charge, and the risk side of things. And this is basically just the industry standard, the synthetic risk and reward indicator, and this is on the higher end, but this is where most ETFs on the Vanguard platform sit. What's the whole idea behind this ETF? We're looking at the objectives. Once again, as with many of the ETFs that I've reviewed on the channel, I'll link the playlist to the Vanguard ones up above and down below. It's a passive or indexing investment approach, and what does that mean? It basically tracks the performance of the FTSE Developed Europe ex-UK index, and that's made up of large and mid-sized companies from the developed markets within Europe. But this doesn't include the UK. If you want to invest into the UK, have a look at a video that I've done on VUKE, the FTSE 100 ETF. If we click on price and performance, you come through. On this table, we get to see what past performances look like, but just looking at this doesn't really give us a flavour of how this has compared to other funds. So let's jump across to Google Finance and have a quick look at comparing this fund VERX against VUSA, the S&P 500. In the different colours, S&P 500 is in yellow. Over the last 5 years, they have correlated reasonably well, but as we can see, those tech-heavy American markets, S&P 500 has done much better. But if we come in and we look at over the last year, the more stable stocks that sit within Europe have performed better. It all depends on what we are attempting to do. What is our investing strategy? Where do we want to see growth? Let's jump across to the portfolio data and let's have a look at what countries you're actually going to invest in through VERX. So this gives us a quick idea, about 24% into France and 20% in total. When we look at this ETF, you have 60% invested into those top 3 countries of France, Switzerland and Germany. Chuck in the Netherlands and you're looking at almost 70%. Then we look at where is the weighted exposure across the different sectors. We are looking at VERX being invested into industrials, financials and healthcare. And I suppose that is showing us why over the past year it has been a reasonably well performing fund, coming in at about 7% growth. Whereas in comparison, you have had over the past year has performed at up 0.4%. You would have done much better to have invested into VERX over the past year through the turbulent times that we've seen with the peaks and troughs that you can actually see here on this chart. Then when we jump on and have a look at the holdings, remember there's 453 stocks within this ETF, and the top 10, many of them are household names. So we have Nestle, ASML, we also have Moët Hennessy, Louis Vuitton, and then SAP and Total Energies and Simons. There are big companies that are in here, and let's see, what does this look like when we look at the good old distribution side of things? A reasonable dividend over the whole year, you would get that 2.76%. 3% gross. And that's paying out quarterly in the normal Vanguard payouts of March, June, September and December's. Probably more importantly than the dividend payout, it's what is this going to cost you? And this comes in at a nice figure of 0.1% ongoing charge. So if you were investing £1,000 into this ETF, you would pay a £1 charge per year. And just have a quick look at the minimums. If it's a one-off payment, you must buy £500 worth of this ETF, or if you're doing monthly direct debits, it is £100. You will have seen in my most recent portfolio update, which I'll link, I have just bought into this fund, and the whole reason behind that is the low ongoing charge, the fact that it pays a nice little dividend of 2.76%, and this gets me a slice of a world ETF. So instead of buying VWRL, I've done a video on that, have a look. In this year's ISA, I have developed my own version of VWRL where I have global diversification, and I have, covering America, I have VUSA, I have VFEM for the emerging markets, and then to cover that European piece, I have VUKE and VERX covering UK, and then the developed Europe ex UK. It gives me a nice diversification and a rounded portfolio at a fraction of the cost of buying into VWRL. Why don't you have a quick look at that video, and I will do a bit more of a deep dive into. So why don't you have a quick look at this video, because I think that will give you some other ideas of other ETFs that you could position alongside VERX. So thanks very much for watching, and I'll see you in the next one. Cheers, bye.